please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Morning, Lata, morning. I don't think the FIIs are deterred by any of the, kind of petering off that we saw yesterday. The money continues to flow in thick and fast. Yesterday, you saw about 800 crores of buying by the FIIs. And the gross purchases, that we also track, that has now picked up steadily to almost about 8,000 crores of gross purchases per day. So it looks pretty good. Anuj, morning. The focus has now shifted away from mid-caps and to large caps. Do you think that's a trend that could sustain?
Yeah, good morning. Two things. The market has fired some warning shots. The India VIX is at 18 and still the market is not falling. The put call ratio is at 1.9 thereabout and advanced decline. I made this point in closing bell yesterday. Keep an eye on an advanced decline. It's indicating that it won't hurt you to just book some profit in the mid caps. Now, yesterday's Nifty high, Sonia, was 11,110.1. I think that one decimal shifted somewhere here. Otherwise, we spoke about this target, right? 11,111, and we are here.
Gautam spoke about it. So we have 5 ones wherever it is, right?
5 ones we have, yes. Exactly. As I said, the decimal issue is there. But so the point here is, if we have a move above this, in that case, the shorts ask themselves, what do they do? The base case is that for starters, maybe we don't go there. But if we start to go above that, in that case, you have the last bit of short covering, because expiry day is about longs or shorts being trapped. There's a good chance that, further shorts are trapped for now. On the large cap space, the market is firing on all cylinders, and that's where the FII buying is happening. But there are clear signs of some distribution in the mid-cap space. This is not to say that the mid-cap will collapse or the mid-cap rally will end. Far from it. But you have made a lot of money in mid-cap. I think a lot of portfolios are up 60, 70, 80% over the last 1 year itself. So it makes sense to book partial profit in mid-caps on every rally. I think on every rally you may want to now raise 5 or 6%. Again, just in the mid-caps and maybe move to large caps. My sense is that the next leg of big rally may squarely belong to the large caps. It will not reflect in the mid-cap index, but it will reflect in the advanced decline. And there's a bit of a difference in that. The mid-cap index can end in the green, but advanced decline can be in favor of declines. The market's expansion phase could be coming to an end. After this, you may see some consolidation, some correction. Now, the next time to buy fresh would be if the market gives you a retreat for whatever reason. It could be because of budget, it could be because of global cues, whatever. It's all about risk reward. The risk reward was in your favor at 10,500. You may buy now and still make money, but the risk reward right now is not in your favor. So that point has to be taken.
The easy money, as they call it, has already been made. I mean, no money is easy to be made.
In markets. It's easier for us commentators to say that. But yes, that's the cliche. But I think that works. That that easy money has been made. The low-hanging fruit has been plugged. Maybe now you need to wait for it.
Okay, you need to jump a little harder to get that higher, tastier fruit. But Lata, about the banks, I guess the positive is the fact that they've allocated to some of the weaker banks rather than the stronger ones. The fear was that the stronger ones would get a lot more. But tell us, how do the banks react today? You think most of it is in the price?
Some of it is definitely in the price, because yesterday we did have a PSU bank. I think it was a 4% rally in the Nifty PSU bank index. So definitely some of it is in the price, but it is the surprise, the weaker elements. Now, I don't know why people were surprised, because it is the duty of the shareholder, and especially when the shareholder is the sovereign himself, to ensure that you provide regulatory capital in the very least. So I was always expecting that the distribution will be skewed in favor of those who are already in the prompt and corrective action list, and therefore the biggest beneficiaries have been the weaker banks. But I would think that the SBIs and the BOBs and the PNBs will also benefit today, because they have got growth capital. Maybe it was promised and therefore in the price, but still the fact that it has come will be seen as a bit of positive. For me, what was worrying are the conditions, and I don't know if we have those lines. The money has come with some conditions. One condition which particularly riles me is that the banks should become the friend of the MSMEs. I mean, this is the, the evil of nationalization that we have not been able to overcome. Yes. The bankers will give where it is commercially advantageous. The government cannot behave that the depositors' money is their money. I have paid my tax. I have paid my debt to the government. This is post-tax savings that go as deposits. The government cannot tell a banker that these shall be his priorities. Do they say that to ICICI Bank? Do they say that to HDFC Bank? Go and give the money to MSMEs? Just, I am providing the capital and so I can dictate. Your capital is 9% of the total. The rest of the 91 rupees is coming from depositors. So you have to run it profitably for the depositor as well. Yes. And therefore, I mean, this is only 1/10 or 1/9 of the entire money, 1/10 or 1/11 of the entire money. And therefore, this constant condition, every government does it. And that is why PSU banks don't get privatized, because that's seen as an extension of the fisc, which it is not. It is post-tax savings. And that doesn't enter the calculation for governments because it's, you know, a sitting duck for them. So again, this constant reference to MSMEs should get the money. It's true that MSMEs create jobs, and it is true that that's the need of the hour. But my fear is that when you're telling bankers that next tranche of money will come upon your good behavior, and the good behavior is how much you have given to MSMEs, I fear some reckless lending. It will be very good if they have their analytics in place and you have your GST bills. Now there is more data to analyze. It will be good if bankers keep that in mind. But my fear is that when you're given targets, you know, in the beginning you will be able to do probably diligence, but ultimately when you have to reach the target, you perhaps will throw diligence to the winds. Therefore, these kinds of conditions are bad. There are other conditions that in a consortium, every bank should lend at least 10%. Which in a way is good, because then you don't have too many banks to, you know, discuss when you want to restructure. But then the flip side is some of these big projects, like say a 40,000 crore steel plant or a 14,000 crore power plant, 10% will mean everybody should be putting in 4,000 crore. You know, so many banks cannot participate. So in the long run, this will actually make it difficult for a lot of banks to participate. But these are operational details. And usually rules change when bankable projects come. That doesn't worry me. The only thing that worries me is what I said. This diktat, if it is not implemented properly, if it is implemented like I have to reach that target and therefore my diligence doesn't work, is a big fear. You know, farm loan targets are given and then they are waived. MSME targets are given and then the diligence falls. This is the fundamental ill of the public sector banking system.
Okay, we'll of course discuss all of this and more in greater detail through the course of the show. It's a big day for earnings as well. You have likes of Maruti, Dr. Reddy's, and even outside the index, heavyweights like Avenue Supermarts, UPL, etc. will be coming out with numbers. So lots to look forward to today. Let's take a look at what our wise experts have to say as we head into trade this morning. Sayan Mukherjee of Nomura says they are building in a strong cyclical recovery, which will drive 24% year-on-year earnings growth. However, he says the market will focus on the upcoming budget as the next key driver. The key stock picks are M&M, HUL, Imami, L&T, PNC Infratech and Bank of Baroda. Nomura's December 2018 Nifty target of 11,880 implies an upside of 7.2% from the current levels.
God, December 2018 and we are almost there. Let's get you some money market views. Mohan Shenoy of Kotak Mahindra Bank says the US dollar continues to weaken further with the dollar index at 3-year lows. He says the key trigger for weakness is a statement from the US Treasury Secretary Mnuchin that a weaker dollar helps US exports. Mohan says oil prices above $70 per barrel is a concern, but has not impacted Indian equity markets and rupee so far. He expects USD INR to trade in a range of 63.40, 63.70 for the day. So strong rupee day.
And on the bonds, Mohan Shenoy says Indian bonds trade on a weaker note due to rising crude oil prices and higher US Treasury yields. He says further triggers will come in from the union budget next week, and he expects the 10-year benchmark bond yield to trade in a range of 7.27 to 7.31% for the day.
Okay, after 15 days, the S&P has crossed Goldman Sachs' 2018 year-end target. That's been the kind of rally that we have seen in equities. Here's Nigel with the world view.
Well, very volatile trading session is what we saw on in the US markets. The Dow at one point of time was down more than 50 points. It managed to end more or less flattish. Though the Nasdaq, that was a relative underperformer in yesterday's trading session, because a lot of these tech-related and IT-related stocks did come in for profit booking. Apple was down close to around 1.5%. You had Amazon, Facebook. They all did see some profit booking. Key reasons, though, why we saw some bit of jitters play out in the US market. One being that, in fact, the tech stocks, they did see some selling. High value valuations, that's one factor that you could talk about. And also there's worry about protectionism. Remember, Wilbur Ross has been saying that we're ready for a trade war as well. So those are the factors that played out. In terms of the European markets, with all the three frontliners, they ended with some cuts in yesterday's trading session. In fact, the FTSE and the DAX, both of them were down close to around 1%. And even from the peripheral indices, peripheral European markets, we had the Italian index as well as, the Irish index. Both of them were down close to around 1%. But if you're looking for green, then the emerging markets, they provided you that. MSCI Emerging Market Index, that in fact has gained for 9 straight trading sessions, and that was evident. We're seeing weakness on the dollar, so that's one factor. The second factor is that base metal prices did see a bit of a rise, and crude prices as well, highest level since 2014. The Japanese index this morning is under some pressure, strength being seen on the yen, so that's not good news. And in fact, the Asian markets, some of them are trading with cuts. The Hang Seng, in fact, is down close to around 0.5%. SGX Nifty is indicating a mild green start. Back to you.
Okay, thank you very much for that last sentence, a mild green start, but it's definitely a huge red for the dollar. The US dollar has tanked the most in 10 months after, of course, that Treasury Secretary Steven Mnuchin's statement that a weak dollar is good for American trade. Well, markets will now be watching for Mnuchin to clarify this statement when he appears in a panel at the World Economic Forum in Davos today. We have Chi Gao, the FX strategist at EM Asia Scotiabank, joining us on the phone line to give us his views. Mr. Gao, what is your reading of the future trajectory of the dollar? I mean, we are already seeing the index at 89, the dollar index. Does it plumb much lower?
Good morning. Yes, I think dollar index likely headed to 88 level after breaking below 90 level. In general, we remain bearish on the US dollar, not just because of Mnuchin's comments. As we know, this year we have converging growth momentum across the world. And we think it will undermine dollar against its major rivals such as euro, yen, and sterling. Meanwhile, most Asian currencies will benefit from synchronized global growth. In particular, some export-driven economies like Singapore dollar, like Korea won. Also, China's economic growth has rebounded last year and will continue this year. So that's why we see Chinese yuan appreciate markedly in the past sessions, partly due to a strengthening euro. And we also remain bullish on Indian rupee. Now we are waiting for the union budget to be presented on 1st February. I expect the central government will stick to fiscal consolidation, and we see economic recovery in India. So there are some market worry about higher oil price and inflation, but we think market will continue focus on the growth story, so which will support rupee. Yeah.
Mr. Gao, morning. We'll come back to the Indian rupee in a bit, but I wanted your thoughts on the comments that came in from Mnuchin overnight. Is it seen by the market as a departure from the traditional US currency policy?
I think it's, in fact, it's the comment itself is not a surprise, because I think if I'm not wrong, last year, since beginning of 2017, either Mnuchin or Trump or other officials at Trump's administration, they talk about the dollar strength already. It's not the first time Mnuchin said that a weak dollar is and I think he particularly like a short-term weak dollar. I think the comment is not new, but he's repeat this comment at current stage is a bit strange, because now dollar is weak already. It's different from last year. At that time, dollar is very strong.
But Gao, what is the next that you expect? Can this go down even further, the dollar? I mean, can it be 85? Can it be 87? I mean, the financial markets could get into a bit of a confusion. Therefore, what are your charts saying?
Generally speaking, yes, we expect dollar could be even weaker. We can see dollar index decline further.
Okay. Any number you have in mind where you probably see some kind of a support?
Support, I think that in the near term, dollar index may head for 88 after breaking below 90 level. Yeah.
And since you are bullish on the Indian rupee, what are you forecasting, given that we have big events like the union budget upon us?
Oh, I current stage our year-end forecast is 62. Okay. I think rupee will benefit from India's economic recovery after the demonetization and the GST implementation. Yeah.
All right. We'll leave it at that. Thank you very much, Chigao, for joining us with your thoughts. So the weak dollar is not going away anytime soon, and to some extent that will cast a pall of confusion on currency markets, and they always rule the roost in other markets as well. We'll take a break on that note. We are coming back, of course, with a whole host of micros. Yesterday was a day of several big results. The top 10 list of stocks to watch for the day in a minute after this break.
Well, this morning, most of the Asian markets are a bit under pressure, actually. Hong Kong, Shanghai, all down about 0.5%. But we seem to be okay. For now, the SGX Nifty is absolutely flat. Let's see. It's the last day of the trading week. We have a long weekend ahead. What are the stocks that you should keep on your radar so that you can benefit from trade today? Our research team is here to give you that very list of CNBC TV18's top 10 stocks. Anuj, what are you looking at?
So, with the caveat that the global setup is slightly tricky today, and there's a good chance that if you don't take out the high yesterday, there could be some bit of a problem. But in terms of stocks, Sonia, I had pointed out ONGC about some 4 or 5 months back in my inflection point, and the way it's seeing the kind of buying over the last few days, it's going through a bit of a re-rating after a long time, and there's a clear shift of money from downstream companies to upstream companies. We have seen HPCL, BPCL, IOC over the last 10 years being 8 or 10 baggers. Look at ONGC's returns over the last 10 years. It's zero. It was 207 or 208 in 2007, and now we are in bonus adjusted, and now we are in 2018, and it's 210. So, and that's where we've seen a lot of delivery-based buying. The other stock that I'm tracking is in the mid-cap space. Balaji Amines, it's a stock where you've seen a lot of smart money moving in. Now, this company had applied for anti-dumping on imports of dimethyl formaldehyd. It's a chemical which is used in making a couple of drugs, and the PTI is reporting that that's likely. It may happen. And so that could be an interesting stock to watch out for in today's trade, Balaji Amines. Okay,
specialty chemicals is the space to be, right? Lately, we've seen so much money come into this particular sector. But let's talk about the banks. Lata, since the weaker banks have got more money, if you had to list down the banks that would immediately benefit in trade today?
Well, I would. My guess is that it's the weaker banks that are going to get, the favor of the investors as well. So I'm sure Bank of India, UCO Bank, IDBI, and especially Bank of India, it's got outsized capital, and therefore these will be the ones that I would think will be, in terms of gainers, the ones that is heading the list. But I wouldn't put it past the SBIs and the PNBs also to be rising, simply because it's also growth capital. It confirms what was always expected. So, the bonhomie may continue today for the good big banks as well. But my sense is the accent will lie on the IDBIs and the Bank of India's and the UCO banks today.
Okay, let's find out what some of the bigger bankers think. Let's listen into the SBI chairman with his view. He spoke to us last evening.
So SBI, it adds 44 basis point to our capital, Tier 1. And we, in any case, had sufficient cushion. So the way to look at it is that it is all growth capital which has been given to SBI. We are a non-PCA bank. So for non-PCA banks, whatever capital has been given, so largely it will be used for the funding the growth. And PCA banks probably to first make up their international capital conform to the international regulatory requirements.
Okay, the stock that has had a big rally over the last 3 days is Biocon, but the numbers look slightly weak, Ekta?
Yes, slightly weak, but I would still say it's largely an inline set of numbers, and important to add that Biocon doesn't really move on its numbers anymore. It's just moving on the hopes of what's going to happen with the biosimilar business. So the revenue was up around 1.3%. The branded formulations as well as the research services is what led growth this time round. Small molecules were sluggish, and the margins came in at around 21% versus 26% odd, and my poll was factoring in margins of around 21%. The profit declined over around 46% on a year-on-year basis. That's because depreciation and interest costs rose almost 39% and 67% respectively, and hence you saw that profit decline. The con call is at 9 a.m. this morning, so obviously the stock will also move in terms of the commentary.
Okay, well, thanks for that. Watch out for that. But Pidilite, Mangalam, good numbers you said?
Good numbers, Lata, stuck above the poll if you look at it from year-on-year basis. The revenue growth compared to our poll of around 1,500 crores, much higher than that. The EBITDA margins at 24%, fairly good as well. The net profit came in at around 339 crores. We were expecting about 340 crores thereabouts. So that was positive despite the higher tax component that we saw. What was actually good is the consumer business saw a revenue growth of 7%. Industrial segment, which was languishing, saw a growth of 12%. The company maintained its margins despite higher cost of goods sold. And then finally, the Fevicol ka jod, so to say, was the volume growth. Just got the volume growth from the management, 23% volume growth. That compares with our poll of 13 to 15%. The highest estimate on the street was about 18%, but 23% is something that the street will really like.
Okay, Fevicol ka jod. Look at that. Big moves also in Pidilite lately,
Big
right?
moves in Pidilite. You know, just a coincidence. This morning I was watching a Facebook video on, you know, all the Fevicol ads since 1980. I mean, consistently the best ad that the company has made. Let's move on then. Abhishek, Canara Bank's numbers?
Well, Anuj, the Canara Bank has been reporting strong set of numbers, especially on the loan growth. Loan growth has been rising in the last 4 quarters, and at this quarter, it is at 6-quarter high in double digits at 12.5%. Slippage ratio is also one of the lowest in last 4 to 6 quarters, so that is about at 2.8%. When you compare it quarter on quarter, it was at 3.8%. Apart from that, due to lower slippages, gross NPA has declined to 10.38 versus 10.51%. They have reported a net profit of 126 crore versus our poll of net loss of 60 crore. More importantly, government announced yesterday that they will infuse about 4,865 crore into the bank, which should push their Tier 1 ratio by 120 to 125 basis points. Expect the stock to be in green today.
Okay, thanks a lot for that. Yeah, I was also pleasantly surprised by the fact that slippages were coming lower, GNPA. It's not a huge fall, but the direction is very pleasing. And coming along with growth, one hopes that the better loans will become more than the problem loans shortly. But 2 tech companies, L&T Info, in fact 3, Emphasis and KPIT came with numbers, Naveen.
So in fact, Lata, as we have seen the move on these IT mid-cap stocks, it was certainly anticipated that the markets had anticipated good numbers from these companies. So talking about L&T Infotech, strong numbers. If you see the revenue for the US dollars, that has jumped 8.5% at around 293 million. Remember, we were expecting a growth of almost 3%. So that is a big kicker, majorly led by your manufacturing segment. In fact, margins have also remained stable around that 17% mark. The other company, Emphasis, also stable set of numbers. In fact, the revenue growth has been around the 3% mark, and the margins have also improved, coming around that 16.5% mark, almost 100 basis point jump in a seasonally weak quarter. The last one, KPIT, strong set of numbers, way above expectations. If you see the overall revenue, that has remained flattish. We were in fact expecting a decline, given that the seasonally weak quarter that December quarter is. On the other hand, margins, they have jumped close to 100 basis point, purely led by the traction that is seen in their core business, that is US. Now the thing is that we have to see is how much of this margin improvement is sustainable. But overall, good set of numbers. I expect all these 3 stocks to be in the green today. Back to you.
Okay, Naveen, thanks a lot for that. In fact, there were many good numbers in this quarter, especially from the smaller companies. Sonal has been tracking all that for us. Sonal, what do you have?
Well, I have a lot of good results on my radar today. I'll start with Indigo, though the numbers came closer to the market close, but I'll still take you through the numbers. The revenue was up 24% and the profits came in higher by around 56%. The yield also came in higher by 6.3% year on year versus an expectation of 5%. Well, the profits were higher majorly because of higher income, higher by 58% on an yearly basis because the company received compensation from various engine manufacturers. So that stock I expect to be in green. Kia Industries, another good set. The revenue was up 17%. Even the profits came in higher by 50%. The other stock on my radar is Bharat Bijli, a complete turnaround. They had operating profit increased by 260 basis points and the profits were also up 200%. The other stock is Everest Industries. They reported an EBITDA profit of 18 crores versus a loss last year. Even they reported profits of around 9 crores versus loss of 14 crores last year.
Okay, well, clearly there is a lot of advantage in the base, but then in companies like Indigo, it's quite clearly showing you discretionary spending is so much on the rise that you can see it in the profit. But we are not done with the stocks on our radar. A few more on your list, Ronit.
Yes, so a couple of stocks on my radar post-market as the results have been reported. So Concor actually a phenomenal set coming in, largely led by the ramp-up of the capacity at the Kathuwas terminal. Revenues are up 24% as well as the EBITDA that came in 70% higher, as well as the PAT that was up 56%. Moving on to Raymond, strong set led by the branded textile business. Revenue was up 14% largely because of the favorable effect of demonetization, as well as the margins. They improved largely because of the auto engineering business. They have been reporting a strong EBITDA growth. And finally, the PAT was up 30 crore versus a loss of around 14 crore. No update on the Thane land. That's what the street was expecting. Moving on to NCC, they have approved a QIP issue of around 550 crores, wherein the QIP price will be around 129 rupees per share. And finally, BEL, they'll consider buyback on Jan 30th.
Oh. Okay, well, lots of stocks, actually, good numbers coming in this quarter. So we will track all of those stocks once the market opens. Thanks, guys, for joining us. Here's a quick recap then of our top stocks to watch. Expected to gain are names like UCO Bank, IDBI Bank, Bank of India, Bank of Maharashtra, Central Bank, SBI, BOB, PNB, Canara Bank, Union Bank, of course, all the PSU banks is what you're watching. ONGC, Balaji Amines in the specialty segment, Pidilite, good numbers, L&T Infotech, Emphasis, KPIT Technologies, Interglobe, very good numbers. Even from the likes of Bharat Bijli, etc., good numbers this time. Everest Industries, KEI Industries, Concor, Raymond, NCC and BEL. While the lone stock from our list expected to be under pressure is Biocon because the numbers were below street estimates.
Okay, well, let's get straight away to one of the banks that reported numbers. I mean, Canara Bank becomes important also because it's the first big PSU bank to announce numbers, big PSU bank. It posted a good quarter. Also, the government, of course, announced that capital infusion and Canara Bank was one of the recipients. Rakesh Sharma, Managing Director and CEO of Canara Bank, is joining in with his reactions to both. Good morning, Mr. Sharma. First, of course, the capital infusion. Your bank will get about 4,800 odd crores, right? As per Q2, your Tier 1 will improve to 11% from 9.6. Is the calculation correct?
First, I am also ready with my Q3 numbers also. Why are you asking for Q2? So my Q3 numbers, the capital adequacy is 12.45. So this two things I'll tell you. One, this 4,865 crores will certainly help, by increasing my capital adequacy ratio by almost 120 to 125 basis points. Okay, but this capital basically the government is giving for growth capital. As you see in our quarterly Q3 results, we have been able to show good growth in advances, 12.5. So basically this capital will be utilized for our growth in advances. And apart from that, of course, we have already announced a plan for raising capital of 3,500 crore by way of QIP. We have already appointed the merchant bankers also, and we will be raising it somewhere during this quarter only.
Okay, Mr. Sharma, good morning. The loan growth was strong. What's the guidance for FY18 and FY19?
No, this FY18 basically my plan for growth was around 10 to 12%. two things here I like to mention is basically the major growth which is coming is because of our emphasis more on retail, agriculture and SME. So agriculture has grown by 14.8%, MSME has grown by 15.65%, and direct housing has grown by 22%. Corporate has grown by 1.35 only. But this growth has mainly come in retail, agriculture and SME. That is one. And one more thing which I have highlighted in my preliminary observations also, although the loan growth has happened, 12.5% loan growth is there YOY, but if you see the risk-weighted assets, this has grown only by 4.05%. That means we are focusing now more on good quality assets, low risk-weighted assets, that is retail, SME and agriculture, and that has helped us in improving our capital adequacy ratio also. The quality is improving.
Okay. Can you tell us what were the slippages exactly in this quarter and what's the outlook as far as the NCLT cases are concerned?
These slippages in fact were quite under control, as last time also we had mentioned that in Q1 the slippages were 5,500 and now Q3 the slippages have come down to 2,641 crore only. So we have been able to control these slippages in not only in smaller accounts but in large accounts also. So this is one. So that way, like in coming quarters also, I am expecting that the slippages will be under control. Now, as far as these NCLT cases are concerned, the first list there were 12 accounts. Out of those 12 accounts, we had exposure of around 10,000 crores, and almost 80% of the outstanding, equivalent to that, it is at bid evaluation stage. Already bids have been received and the evaluation is taking place. So hopefully by March, some accounts should get resolved. Otherwise, I think if not by March, by June, resolution will happen. In the second list, we were there in 17 accounts. In one account, we were the leader. We have already filed with NCLT. In the remaining cases, also the other lead banks, they have filed with NCLT. But this is, I think, at admission stage. Once that happens, there also resolution will start happening.
Okay. Now, what is the outlook on gross NPAs, considering that your growth is strong and slippages are reducing? What is the percentage GNPA that we can expect?
Now I will cover it in two ways. Now suppose if the bigger accounts are there, we have like out of my 40,000 crore of gross NPA, 15,000 crore is stuck up only these big accounts where RBI list 1 and list 2. Now if this does not means by March, if it does not happen, means if it takes some time, then also we will be with the way the growth is happening and we are able to recover some of the advances. Our gross NPA we are expecting below 9.5% and net NPA certainly below 6%, somewhere around 5.5 to 5.75, because additional provisioning will also be made. This thing. But if the resolution happens in these cases, so then certainly, like we can assume this 15,000 crore out of that major amount will get resolved. So certainly there will be a substantial reduction, but either it can happen in Q4 or maybe Q1 of 2018-19. So at this stage, I think the exact number I will not be able to give, but certainly our target is to, even if it does not happen, bring down the net NPA below 5.75 by March 18.
Okay, below 5.75 by March 18. With the healthy loan growth and a reduction in stressed assets, how do you see net interest margins panning out as we head into the new fiscal?
Now you see that our NIM, like despite the falling interest rate scenario, if you see the net interest margin, there is a good improvement is there. So from 2.19, it was 2.19 as on December 16, which has increased to 2.39. In fact, continuously quarter on quarter we are showing increase. So somewhere at the beginning of the year also I had mentioned that I am targeting around 2.5. So my target will be to reach 2.5 by March 18. Say somewhere 2.45 to 2.50.
Okay.
Okay, thanks a lot for joining us and talking about the numbers as well as the way forward. The slippages are expected to remain under control and loan growth has been very good for Canara Bank. Let's take a quick break, but how do you approach trade today? Our technical experts Ashwini Gujral, Sudarshan Sukhani and Prakash Kava will join in next. Stay with us.